Hello. Um, this video we're going to start on page 9-12. Alright, on this page we talk about the federal tax deposit system. Okay, now when you become an employer or you start performing services as a service bureau, a payroll service bureau for one of your clients who has a payroll, all right, there's the one thing you're going to find out very quickly about payroll is that there are a lot of forms involved. Even though payroll is fairly simple, unless of course you've got a lot of different types of deductions and tips and all that stuff. Calculating a paycheck is not that difficult. Okay, but making sure all the forms are filed on time can give you a little bit of a nightmare. All right, but the first thing you have to determine before you deposit your federal taxes is you have to figure out what your frequency is going to be. Okay, so all new employers start off usually for the first 3 years, all right, as a monthly depositor, but it could change, all right. And again, the federal will have different laws than the state, and different laws than they would for unemployment. Okay, so if you look at page 912, they refer to something called a monthly or a semi-weekly depositor. All right, now what's going to happen is unless you're a brand new employer, all right, on or about the middle of November, you're going to get a notice from the IRS, and they will state what kind of a depositor you are, a monthly depositor or a semi-weekly depositor. All right, you are, again, if you're a brand new employer, you're automatically a monthly depositor for at least the first year. After that, the IRS will determine how often you need to deposit your federal income tax and the FICA taxes that you withhold from your employees' paychecks, plus any federal unemployment tax, all right, by a certain date. Okay, I'm sorry, let me back that up. All right, the FUTA tax, or the federal unemployment tax, is paid at a separate schedule. Okay, so what they do is, like I said, you get this letter in November of every year. So employers who got a letter in November of 2017, what the IRS does is they use a look-back period. Okay, so what they would do is they'd go back to July 1st of 2016, and they would go forward to June 30th of 2017. And in that 1 year look-back period, all right, if your federal tax liability, okay, in other words, the total federal income tax you withheld from your employees' paychecks in that year, plus the total FICA taxes you withheld times 2, all right, because you generally have to double that, all right, if that grand total was $50,000 or less, then you are a monthly depositor, all right. If that grand total was $50,000 or more, you are a semi-weekly depositor. So what's the difference? All right, a monthly depositor deposits their federal taxes, okay, on the 15th of the month following the month of the payroll. Okay, so I'm making this video in April of 2018. So if I was a monthly depositor, I would have to deposit all the federal income taxes I withheld from my employees' paychecks, all right, plus my share of the FICA tax, and I would have to deposit that by May 15th. All right, assuming, of course, May 15th falls on a regular day. If it falls on a Saturday, Sunday, or holiday, all right, you would default to the next business day. Okay, the penalties for not depositing on time can be rather stiff. For example, if you're 1 day late, it's 2%. If you're more than 5 days late, it can be as high as 5%, and if it's 15 days or more, okay, it's 10%. All right. and that, and you have to, obviously you have to have a good reason to get out of the penalty. All right, so it's not unusual, for clients to pay their taxes late and to get hit with a penalty. That's why you have service bureaus that will make sure that this is done for you. What they do is they automatically use, you have to make sure there's enough money in a certain account that the payroll bureau can access, and they will pay all the paychecks and all the taxes on time. All right, out of that account. All right, once the taxes are paid, all right, then quarterly you have to generally file Form 941, which is the quarterly federal employer tax report. All right, and on there you report, what was the taxable wages of your employees, how much federal income tax you withheld, and how much FICA tax you withheld, and the total of that report has to equal the amount that of your federal tax deposits. That's how that works. Okay, all right. Federal taxes now must be paid through the EFTPS system, the Electronic Federal Tax Payment System. All right, so when you first become an employer, all right, you have to make sure that you get yourself set up with the IRS to pay the taxes, to the Treasury Department through the EFTPS system. All right, you've got to get set up with IN tax, all right, with Indiana, because Indiana taxes have to be paid electronically too, and you have to get yourself set up with the Indiana Department of Workforce Development, all right, to pay your state unemployment taxes. So there is a lot of forms and a lot of things that come into play when you have a payroll. All right, there's a lot of busy work involved. All right, even if it's just one employee, all right, you still have to file the same forms as if you had 100 employees. All right, there is no difference. Okay, if you have a small enough payroll, all right, if it's $2,500 or less on the liability at the end of the quarter, you can pay your taxes with Form 941. If your tax liability is less than $1,000 for the year, all right, you can file Form 944, which is an annual return, and pay your federal taxes that way. Okay. All right, and then on page 917 and 918, okay, they talk about employers and their reporting requirements. All right. Now, generally at the end of the year, you're gonna send out a set of W-2 forms, okay, to 3 different places. Number one, you're going to send the W-2 to Social Security. All right, this could be done on paper or it could be done electronically. All right, it all depends upon how many employees you have. Okay, again, if you have a payroll service, they would do this automatically for you. All right, so what happens is that copy A of the W-2 is sent to the Social Security Administration. Okay, this is how the Social Security Administration updates your benefits, potential benefits every year. So again, I always strongly urge all of my students to go to ssa.gov. That's S as in social, S as in security, A as in administration, .gov, short for government. All right, and download your Social Security benefit statement every year. All right, it doesn't matter how old you are, whether you're 16 or 60. The reason for doing so is to make sure that the copy A of your W-2 was actually sent to Social Security. All right, because if those forms aren't sent to Social Security, you can't get Social Security benefits. All right, so this is something that you should do once a year. All right, you can find out immediately. All right, they send you a PDF file. You never have to leave your computer. All right, and it doesn't take very long. Okay, so do that to guard yourself for Social Security purposes. All right, 3 copies of the W-2 get sent to you. All right, so you can file one with your federal, one with your state, and keep a copy. All right, and one copy goes to your employer, and one copy goes to the state that you're in, assuming that the state has a state income tax. All right, so that's the primary one that employers have to send out to their employees. Okay, other examples of forms are at the top of page 918, and that is the 1099 series. All right, for those of you that are going to get into tax or have been in tax, you probably will see most of these forms. All right, a 1099B, you're going to see that from brokers. That's for anybody that sells stocks and bonds during the year. 1099 DIV is for anybody that gets dividends, whether foreign or domestic. A 1099 INT is your interest statement from banks and credit unions, all right, and from brokerages. A 1099K is a relatively new one. All right, this is what you would get from a place like eBay or something like that. All right, a third-party merchant that has sent you payments during the year, and this form has to be issued to you if the payments were $20,000 or more in any given year. All right, you also have a 1099 MISC. All right, this is the form that is sent to a sole proprietor during the year. All right, that shows the amount of payments that were made to that sole proprietor, all right, from whoever the payer is. All right, again, if that you generally do not have to send a 1099 to an individual. All right, so for example, somebody roofed your house, all right, and you do not have to send them as an individual. If you are a business, okay, and you find out they're not incorporated, all right, you have to send them one every year, all right, by January 30th. Okay, that is the rule. All right, January 31st, I should say. W-2s also must be sent to the employee by January 31st, either by the mail or in electronic form. Okay, the last two 1099s on page 19 are the 1099-R. All right, you're going to see that for anybody that withdrew from an IRA or had a pension during the year. And then you have a 1099-G, which would be if your client received any unemployment compensation during the year. That's reported on a 1099-G. And then finally, the last one is a W-2G. All right, and a W-2G is reported when somebody has gambling income. So if they go to a local casino and they win over a certain amount of money, all right, then the casino has to give them a W-2G, and remember that all of these W-2s and 1099s are reported to the IRS. So all of these have to be reported on your tax return, or the IRS, they'll recalculate your tax return and send you a bill. All right, that's the end of this video.